PayPal has been crashing. Is now the time to buy? As I'm sure many of you know, PayPal, ticker symbol PYPL, is a financial company in the transaction and payment processing industry. Its current market cap is $64.71 billion, which is way down from where it was about a year ago. So I want to answer, is PayPal a buy finally, or is it still a bit overpriced and needs to come back down? But before I get started, please, if you could, like and subscribe. It means a ton to me. And if you want, leave a comment telling me what you think about PayPal, or if there's any other stocks on the stock market that have your eye. I'd love to take a look and have a conversation with you. Moving over to the company's website, we see that PayPal's main goal is to shape the future of digital payments. It's been a company for longer than 20 years, and it's leveraged technology to allow payments between consumers and merchants in over 200 markets. This is a graphic showing all of the different markets and ways that PayPal can help you and merchants and customers like you. If you want to pause the video, you can check these out more in depth, but in the interest of time, I'm going to move on because we have more to talk about. This slide here will give you an idea of the scale of PayPal's business and just how large it actually is. It currently has over 400 million active consumer accounts, 35 million active merchant accounts, $1.4 trillion in total payment volume, and 24 billion total payment transactions. It reaches over 200 global markets. You can send 150 different currencies and hold 25 different currencies. There's hardly any other company in the world that has such a large scale and breadth and reach into the global markets as PayPal does. We can see on the right hand side too, it is one of the most trusted brands in the world. It's got accolades for most trusted brands, best employers, most innovative companies, etc. So this company, PayPal, is really doing its best, and it's on top of the game right now. With that said, there are a few things that investors aren't too happy about, and that's why PayPal has been falling. But first, let's go over the numbers and see if investors in Wall Street are correct or if they're overreacting. So taking a look, we can see that revenue is at the high end of their guidance. This guidance was lowered in the past though, which is part of the reason why the company's stock has fallen. But we can also see that they've got 24% non-GAAP EPS growth, which is excellent. It is lower than what was expected, but it is still excellent for most companies on Wall Street. Transactions have seen a 10% increase, and total payment volume has seen an 11% increase on a spot basis through their Braintree, PayPal, and Venmo accounts. Non-GAAP operating income has seen a 20% increase year over year, and their operating margin has expanded by 230 basis points to 21.4%, which is very solid. The company is even showing that it hit the midpoint of its guidance range, which shows that it knows how to predict how its business will do. And it's guiding first half of 2023 non-GAAP earnings per share growth of 28%, so an increase in the growth rate. But not everything is sunshine and rainbows. There is a major issue with free cash flow. The company currently posted a negative $0.4 billion free cash flow number. This includes a $1.2 billion negative impact from its European buy now, pay later loans, which it just divested out of and sold to KKR Capital. This is a one-time event, so if we look at their free cash flow, excluding this at $4.9 billion on a trailing 12-month basis, we can see that that PayPal is free cash flow positive and in general should expect to see a lot of free cash flow continue to come into the company into the future. PayPal is continuing to try and update and revolutionize its product. We can see this by expanding their passkeys globally, which allows people to log in with biometrics rather than having a password, which is considered generally to be more safe. They're also expanding tap to pay for Venmo and expanding on their Venmo teen accounts, which, as the name suggests, is designed for teens aged 13 to 17 so that they can send and receive money through Venmo and have a debit card for themselves. And finally, we can see that PayPal has inked a multi-year deal with Booking.com to become a strategic card processor for their global company. Booking.com, if you don't know, is one of the largest travel booking sites in the world. They have tons of different brands. If you're not familiar with Booking.com, you're probably familiar with another brand that they own. So this is big news for PayPal and should allow the company to continue to expand their payment processing for the next several years. And really quickly, before I wrap up my review of the company's website, I wanted to point out that PayPal has created a stablecoin. It trades under PYUSD, and it's meant to be pegged to the US dollar. PayPal says it is backed by secure and highly liquid assets, which makes it relatively safe compared to other cryptocurrencies. The company's whole goal is to simplify cryptocurrency and make it accessible to the masses. It is designed to equal $1 in value at any time, and it's backed by dollar deposits, US treasuries, and cash equivalents, which makes it pretty safe compared to other cryptocurrencies and even other stablecoins out there. PayPal plans to allow its customers to buy, sell, hold, and transfer PayPal USD in its app or on its website without fees. That is exceptional. They even plan to extend their payment processing to Ethereum wallet addresses that accept it in just a few steps, but network fees may apply to those transfers. But what's really interesting is that they hope to allow you to check out with crypto, and they'll send you PayPal USD so that you can pay for your items. It's kind of an interesting way of getting itself in between the transaction from Bitcoin to a burger or whatever you're trying to buy online. I hope it's not a burger, but you get my point. Consumers will even be able to convert PayPal USD to other cryptos that they support at a small fee. It's also going to be open and built on the Ethereum blockchain, which allows for programmability and customization. And those are just a few of the reasons why I think we should be really excited about the potential for PayPal and its stablecoin to take off and revolutionize how the cryptocurrency industry works. So that was a quick look at the company. Now let's take a look at PayPal's underlying financial numbers and let's see if there's a deal here. Starting with annual revenue, we can see that it's grown at 16.6% per year, which is excellent, but that revenue growth is slowing down considerably, which is part of the reason why this fall in PayPal stock has occurred. Investors thought that the revenue would continue to grow at faster rates, and it's starting to slow down as the company gets larger. Earnings before interest, tax, depreciation, and amortization again looks great, growing at 19% per year, and there's a little bump in 2022, but nothing really to complain about. PayPal's gross margins have contracted a bit, and that's due to increasing competition and trying to become the lowest cost payment provider for merchants and consumers alike. Their operating margin, on the other hand, has stayed relatively stable around 15% per year. PayPal's return on assets is also generally stable around 5%. We did see a small decline in 2022 down to 3%, but that has rebounded in the trailing 12 months, and I expect this to stick around 5% for the future. And in the company's operating earnings, we can see it's grown by almost 20% per year, but most of that growth occurred between 2019 to 2020. And since 2020, operating earnings have stayed relatively flat, which again is one of the major reasons why Wall Street is getting worried about PayPal. Growth is slowing down, it's maturing, and its earnings growth just isn't as explosive as it once was. But as the company matures, we can see that they're starting to do more and more share buybacks. What started out as very minimal share buybacks in 2018, 2019, and 2020 has started to pick up a little bit. And in total, the company's bought back about 1.57% of their outstanding shares every year for the last 5 years. PayPal also keeps a very healthy amount of cash and short-term investments on hand in case they need to do any sort of buyouts, investments, or pay off any sort of debt that they have. Management has started taking out long-term debt, and we've seen this increase in debt that seems kind of rapid, but even the final numbers here in the trailing 12 months are about equal to the amount of cash that PayPal has on hand, so I'm not worried at all about this debt load. PayPal's debt load is so minimal, in fact, that its short-term investments tends to pay off the company's interest expenses each year. That's why we see several positive bars. That's their short-term investments paying off more than their total interest expense, which makes the net interest expense positive. We can see PayPal's annual levered free cash flow can be a little bit spotty with very large lump sums in certain years and smaller amounts in other years. But in general, the company is very solid and very consistent. It is consistently producing positive free cash flow, with the exception of, like I said, the buy now, pay later write down that they took. That's not reflected in these numbers, but it should be in the back of your mind that the company is technically free cash flow negative for the last quarter due to that one-time charge. In general, though, I expect them to continue to be free cash flow positive, and I don't see any risk for this company going into negative free cash flow into the future unless there's another major write-down that is only one-time charge. This is best reflected by their free cash flow per share, which tends to stick around the $3 to $4 range and looks quite a bit more stable than their levered free cash flow numbers alone. Even with all that free cash flow, PayPal does not pay a dividend because they can make more money by reinvesting in their business. So, moving on to the valuation chart, we can see that PayPal, since its IPO, has been what I consider to be very expensive. The price has never really reached its fair value zone. It's always been overpriced due to the high growth that this company has been able to achieve. It got excessively overpriced up to, $308 a share in 2021. And that was just excessive. That was irrational. And the stock needed to come down. Since then, it's come down far more than I expected it to, and I think it's come down more than most people have expected it to, and it's underneath our fair value line, which is currently set at 19.93 due to the company's growth rate over this time. If I change this fair value PE to something that reflects PayPal's projected annual growth, like the number below, 16.91, we can see that PayPal is still in what I would consider to be a fair value. There is not a huge margin of safety, but I think the margin of safety in this company is actually due to its high growth rate and the expectation that even if it doesn't grow at the expected 16 to 17% per year, even if it hits 10% per year, this is probably a decent price to pay for PayPal. At the very bottom, we can see its PEG ratio, or its PE over growth ratio, is 0.95, which is exceptional, especially for a growth company. This is where you hit multi-bagger stock investments, is when you can buy a growth company or any company for a PE that is lower than 1 year of its growth rate. In PayPal's case, we're not very far below the magical number of 1, but 0.95 is still excellent for this company. So to put it all together, what I like in PayPal and why I would invest in PayPal is that it's a trusted consumer brand. It is in so many different markets. It is constantly awarded for all of the excellent work it does in bringing the world and merchants and consumers together. And I like that. I like that the brand is so highly trusted. It also has excellent growth potential, and it has a PE over growth ratio of less than 1. Like I mentioned, that is where you find these huge gaining stocks because the growth of the company will continue to carry it, and you're paying at an earnings ratio of less than 1 year's worth of growth. The other thing I really like about PayPal is it's a low risk bet on stablecoins. If stablecoins and cryptocurrency doesn't work out, then it doesn't work out. PayPal still has an amazing business that can survive even if it loses money in its stablecoin area. But if the company's stablecoin does pay off and it can make payment processing and transactions across borders nearly instantaneous and nearly free, it could really revolutionize how we pay money, how we transact money. And it's kind of a monopolistic market where one or two or maybe three at most companies can really control this. So if PayPal can dominate the stablecoin area and create a stablecoin that is not only fast and works well, but is trusted by consumers, governments, companies, then the sky is really the limit for its transaction processing capabilities and profit potential. But what I don't like is PayPal's increasing competition. Let's face it, a lot of companies are trying to get into the transaction processing game, and the biggest competitor that worries me is Apple. I'm not super worried about the technology behind Apple's payment processing. It's just the brand trust that Apple has. People will switch to Apple just because they're loyal to Apple products. Even if they're loyal to PayPal, I think people are more loyal to Apple. So that worries me a little bit. But so far, we haven't seen a major deterioration in any sort of meaningful financial results for PayPal to worry that Apple Pay is going to completely dominate it in the future. I would also like to see more consistent free cash flow growth. PayPal is still growing. They're still reinvesting and spending a lot of money into going to new markets, into growing markets. I understand that the company is expending a lot of its resources trying to find that next growth cycle. But as the company matures, it should focus on creating free cash flow and rewarding investors through buybacks or dividends. I think the company creates a ton of free cash flow the way it is, which is great, but there's so much potential for it to continue to expand that free cash flow, which it doesn't seem to want to do. Their management wants to be more focused on taking lots of different growth bets, which is totally fine if one of those works out. But if none of those work out, then that's just a lot of lost money that could have been reinvested into buybacks, into dividends, or into parts of the company that actually make money. And my third and final issue with PayPal is that it relies on consumer transactions. In any sort of economic downturn or large market recession, payment volumes will inevitably fall. And that means less money for PayPal. I don't think a single market and economic recession would dissolve PayPal as a company, but it would seriously hurt their underlying numbers because, as I said, most of their transactions occur between consumer and merchant. And if consumers don't have money to spend, they're not going to use PayPal or any other transaction company because there is no transaction occurring. So what are my thoughts of PayPal? For me, it's a resounding buy. I'm really excited for the company. The stock price is at an excellent location right now, and I think that PayPal has a ton of growth in the future. Please do not go out and buy PayPal because I said I'm going to buy it. Please do your own research. The stock could continue to drop for a very long time, but I think buying at this point right now will prove to be very profitable, even if you do have to wait several years for investors to turn around and start investing in PayPal again after they just got burned by 2020 and 2021. So those are my final thoughts. I want to hear what you think. Please leave a comment down below if you think you're going to invest in PayPal or if you already have invested in PayPal. Let me know if there's any other companies that have caught your eye like PayPal. And with that, I'll see you guys next time.